Tata Chemicals Q3 FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Gavin Lisa from CDR India. Thank you, and over to you, sir.
Thank you, Sagar. Good evening, everyone, and thank you for joining us on Tata Chemicals Q3 FY25 earnings conference call. We have with us today Mr. R. Mukundan, the Managing Director and CEO, and Mr. Nandakumar Tirumalai, the Chief Financial Officer. Before we begin, I would like to mention that some of the statements made in today's discussion may be forward-looking in nature and may involve risks and uncertainties. I now invite Mr. Mukundan to begin proceedings of the call. Over to you, Mukundan.
Thanks, Gavin. Good evening and welcome to everyone. I'm joined by my colleague, Mr. Nandakumar Tirumalai. I will start the discussion with a brief overview of our operational highlights across business and geographies. The demand scenario across geographies is as follows. Broadly, the Asian markets continue to show growth, particularly China, which has shown robust growth in volume compared to previous year. US and Western Europe, rest of the world, in fact, led by US and Western Europe, is showing a slight decline, reduced demand for flat and container glass. In the short term, the current demand-supply situation, in our view, is likely to persist, while in the long term, it will be stabilizing and balancing out, driven by the growth sectors, primarily solar glass and the lithium carbonate and other related markets, which are growing at a faster pace. Supply has certainly increased in this quarter from major exporting countries, including China, US, and Turkey. China's exports have been muted and moderated depending on the domestic demand. But clearly, the US and Turkey have upped the exports from their units. In fact, part of the exports also have gone to China, which has supported the increased output. In terms of pricing, China's soda ash prices sharply dropped, anywhere between 25 to 30%. In India, soda ash prices declined compared to last year's same quarter by about 15%, primarily driven by lower-priced imports. The domestic prices in Western Europe and US has remained steady. These are, as you know, mainly annual contracts. We expect pricing to remain in a similar level or around the same level, maybe trend a bit lower, at least for the next 3 to 6 months. Overall, the revenue was down 4% against Q3, largely due to pricing pressure. The performance is, in India, lower to previous year, mainly due to lower realization. It was offset by a little bit of higher volume. Imposition of MIP is expected to be sentimentally positive, as this will safeguard the domestic price volatility. Our FOS plant is on track to go into full utilization of capacity. US overall sales volumes were higher. However, prices were lower than Q3 24. US exports to Southeast Asian countries, Indonesia, Malaysia, and Thailand increased significantly. UK had low volume. Pricing was slightly better. We also took an exceptional charge of 70 crores.
There are more than 20 parties in the conference.
70 crores consisting of estimated expenses related to employee termination benefits, the decommissioning of the plant, as we ceased the operation of soda ash production at our Lostock site. 70,000 Medisol plant has been commissioned in UK. We've also, as I mentioned, ceased the cessation of the Lostock plant in North, which is underway. Kenya saw low volumes, however, prices remained steady during the quarter. Rallis results were lower due to continued weakness of export demand and intense domestic market. In conclusion, while overall our volumes have tended to be better than previous year, especially in India and US, and they will continue to remain so for the next quarter too, there is a pricing pressure which is impacting our margin structure even though costs have come down. We also do believe that the current prices are below cash costs in China and is actually unsustainable beyond certain point. Our focus is on increasing our sales volume through customer engagement as new capacities have come on stream in India especially, and these are available to sell in the market. We will focus on cost rationalization and optimization, as well as we will calibrate our capex now going forward to suit the market conditions. With this, I hand it over back to moderator for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question comes from Saurabh Jain from HSBC. Please go ahead.
Yeah, thank you so much for the opportunity. I wanted to seek a clarification. Did I hear it right that there are exports coming out of China now? And if yes, then can you quantify the amount and the regions where it is heading to?
Sorry, question again?
Yeah, I'm saying...
line was muffled. If you can use the handset mode in case if you're using the speaker mode, please.
Sure. Sorry, can you hear me better now?
Yeah, much better, much better.
Okay, thank you. I'm sorry. Wanted to seek a clarification. Did you said that exports of soda ash are now coming out of China? If that is true, then how much is the quantum of the exports and which regions are they kind of flowing to?
Yeah, so I think China till last quarter remained a net exporter. There is some small quantities which are coming out of China, not a large quantity compared to the quantities which are getting exported from US and Turkey. And largely these products are going into Southeast Asia.
Okay. And do you also see any, synthetic capacities in China kind of, coming back online? What are your thoughts over there? Or any closures in plants that you might have seen?
So clearly, I think what is happening in China is exactly what we had said. As the Inner Mongolia capacity at Berun comes on stream, that will tend to push the synthetic plants which are on the coast to start to move material out because somewhere something has to give. Exactly as you mentioned, either people start lowering their output or they become unviable. Already we have highlighted from all the data sources available, China is today selling at today's market prices, both the processes, U and Solvay process they use, are below cash cost. And we just have to wait and watch how long this is sustainable. We do believe the current prices are unsustainable for China, for domestic and export blended together, and especially for exports. Even from India, these prices are unsustainable for exports today. So I really think this is a point we have to wait and watch.
Okay, understood. That is helpful. My second question is on the UK plant. I think there was a notification that the production of chemicals in that plant has ceased production. So can you clarify, is it only a short-term pause or it is a complete decommissioning? What is the strategy on that plant? And which chemicals in particular are impacted because of this? And if you can also quantify the benefit that it is going to flow to the company because of that closure.
Yeah, the cessation of that unit, lost of unit, it's not the complete plant, but what it has ceased is to operate the soda ash unit. There are some other parts of the unit which will be still running. And for example, delivering some of the chemicals to customers there, and those will continue, including the traded imported chemicals, soda ash, which we are getting from US into the UK market. Our intention is to maintain our market share in UK for heavy ash with material coming in from US. And we would continue with production of bicarbonate and production of salt in UK. It is just that soda ash has been ceased to be produced there.
Okay, so it's like a temporary pause because of adverse economics, and if things improve in future, then you will bring that capacity back live again. That is
no, the offshore plant is ceased to operate, and
okay.
It is unlikely that it is going to start.
Okay, sure.
But
Okay.
other parts will continue. What I mentioned is the bicarb at Winnington and bicarb at, salt at Middlewich will continue.
Understood. I'll get back into the queue for more questions. Thank you so much.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please restrict your questions to 2 per participant. If you have any follow-up questions, please rejoin the queue. The next question comes from Abhijit Akella from Kotak Securities. Please go ahead.
Yeah, good evening and thank you so much. Mukund, you mentioned about calibration of capex in light of market conditions. If you could please help us understand what the revised plan might be now. You had previously articulated plans to expand across most of your major geographies.
Yeah, in terms of our capex, in terms of let's say 400,000 ton in US and about 300,000 ton in Kenya and 300,000 ton in India. When I said calibrate, we are also looking at option of bringing them up in stages. In Kenya, for example, we will be bringing on stream 50,000 ton immediately, and then we can bring the capacity out in steps of 50 or 100,000 ton, so that we are able to so that we manage our cash flows better. Abhijit, it is not to do that there's a change in plan. Even in US, we are examining is there a 2-step investment option there, which we will come back with specific. But clearly, this is when I said calibration, the target doesn't change, but there is an opportunity to bring these up in phases. In India, that opportunity is not there. The 300,000 ton will come as one stream only. Whereas in US, it can come in 2 steps. In Kenya, it can come in about 3 to 4 steps.
Got it. Thank you so much. And the other one I just had was with regard to any color you might be able to help us with on the progress of the annual contract negotiations in the US.
So contracts in US are more or less done. I think the annual contracting is more or less done, barring some minor quantities which need to be stitched up. Even in India, I think contracting is for the quarter and some for half year is more or less done. So if you needed the color, the domestic prices I mentioned are either same or maybe $1 or 50 cents or $1 less than last year, but it's not a big move. So we'll have to see margin structure depending on the gas price.
Right, and the US also commensurate reductions.
Yes, sir. When I spoke about $1, 50 cents to $1 reduction, that is mainly the US market. It's a blended number, so and in India the pricing is more or less steady as we speak.
Okay, thank you so much, and wish you all the best.
Thank you. The next question comes from the line of Vivek Rajamani from Morgan Stanley. Please go ahead.
Hello, can you hear me?
Yeah.
Hello.
Yeah, I can hear you. So go ahead. Vivek, go ahead.
Yeah, thank you, sir. Yeah, sorry. Sir, just a couple of clarifications. On the US, I think you've mentioned that there was a production outage which potentially explains the sequential drop in volumes. Could you also, give us a sense of, what the cost impact was, which impacted your EBITDA because of the same?
So Vivek, actually we have 2 large shutdowns in a year, and usually this should have happened in Q2. We pushed it to Q3, and mainly to ensure that we are able to we supplied to customers even when the pricing was a bit higher. As far as the Q2 is concerned, let me just say, including Q4, our annual numbers should be ahead of the previous year numbers. So we are on track to sort of deliver volumes which are more or thereabouts. There will be no change in the volume as what we delivered last year. In terms of the maintenance cost, the quarters where there is a maintenance shutdown like this quarter, usually it is about 30 odd crores of cost impact for that sustenance shutdowns.
30 crores. Got it, sir. And when you say that in terms of volumes, you should be above last year, just to clarify, is this ongoing activity now over, or is there some spillover into Q4?
No, it's not over. It's over, and I think it was mid quarter we took the shutdown.
Sure, sir. Thanks. And just a last clarification for the question that was asked by the previous participant. You mentioned the U.S. contract in terms of the ASP, it's broadly unchanged, but your margins would be determined based on the gas pricing. If you could just elaborate a bit more on the margin part, that would be super helpful.
It should more or less remain flat, Vivek. I wouldn't want to our team is still going through the process of hedging. We expect, if at all, a squeeze of 50 cents to $1, not more than that per ton, as far as the domestic sales are concerned.
Got it, sir. Okay, sir. I'll rejoin the queue. Thank you so much.
Thank you. The next question comes from Sumant Kumar from Motilal Oswal. Please go ahead.
So, sir, considering your competitor numbers reported today, and they have shown a good operating performance, but when it's in our soda ash India business looks muted despite volume growth in salt and soda ash.
Yeah.
Is there because of we are selling more on contractual basis, or we have a lower spot sales?
No, if you really look at the EBITDA number for the quarter, it is almost similar to previous quarter as far as the TCL is concerned, compared to previous year, it is down by 108 crores, the EBITDA, largely driven by the increase in employee benefits by 12% and freight cost by 16%.
So I'm talking about India business.
I'm talking only about.
Okay. Okay.
Yeah. So compared to India business, if you compare to previous year, the same quarter, we had 206 crores of EBITDA. This year we got 209 crores of EBITDA. It's almost at par compared to previous years. In fact, India business has improved from the EBITDA which it had previous quarter. 144 crores was the previous quarter EBITDA. This quarter the EBITDA is up to 209 crores. It's almost 60 odd crores more than 65 crores more than previous quarter, immediate previous quarter.
So when we see the overall cost scenario for India business in energy cost and any other cost, and that is mostly stable, and our volume has also increased in soda ash and salt, but still we are showing a muted numbers. So is there, you are talking about the employee cost has increased for us?
No. In fact, when I said EBITDA includes all the employee costs, everything. So in fact, from the previous quarter of 144, it has gone to 209, and from previous year, the same quarter it was 206 EBITDA. So that takes care of everything. Rest is all issues related to JV income, other income, and all that, and also the interest cost, because we also moved into India. The debt from Singapore has moved into India as we speak.
Okay. Thank you.
Thank you. The next question comes from Arjun Khanna from Kotak Mahindra Asset Management. Please go ahead.
Thank you for taking my question. So the first question is just to understand the capex going forward. So when we had announced capex, we said that if we don't see 20% IRR, we won't go ahead. Given where prices are at this point in time, I'm kind of curious why are we going ahead with the capexes, given that it seems that a 20% IRR seems difficult at this point in time. The second part is if you could give us the timelines. So while we have done the first phase of capex for US, Kenya, and India, what are the timelines for the expansion of 400 and 300,000 in salt?
Yeah, in terms of, you're absolutely right. in terms of which is what we said we'll calibrate it. What has come on stream, we will sort of run it to full capacity. What is going ahead is the Kenya 50,000 ton as we speak. And we also fundamentally don't take a short-term view. We will calibrate it to cash flows, but we don't take a short-term view. If we do believe that in the medium term these are going to trend upwards, which is what our belief is, we will bring it on stream in a calibrated manner, which is not bunch them together, but bring them out in phases. That is what we are doing. And these are, in addition to that, our capex mostly is brownfield. So for us, every rupee contribution we earn, the fixed costs are already covered. So it flows straight into the bottom line. So for us, the returns will still be good, and we will keep a watch on the return, as you mentioned. That if the returns don't track what we committed, we will make sure that we either optimize the capex, or we phase out, or we wait for better visibility.
Sir, could you help us with the timelines of US, Kenya, and India in terms of, is it a 3-year period where we expect this capex to be done through? I understand there would be, but what is the timeline for this 1 million ton expansion?
So we had initially planned exactly what you mentioned, 3 years. So depending on how we phase it, it may go into 4 years, but we'll come back to the specifics because it's also brownfield. It allows us to bring capex on stream, earn the cash flow, and then use the cash flow which we want to do the further expansion.
Sure. Sir, just on the debt part of it, our net debt is up almost 900 odd crores. We had earlier stated that we are looking at paying down debt. Since then, debt continues to move up. So how do we look at this at this point in time in terms of calibration with capex? So what kind of peak debt do we envision at this point in time?
Yeah, Arjun, Nandu here. So on the debt part, Arjun, if you look at it, it's gone up compared to March 24. Mainly on the working capital debt part, long-term debt is intact. In fact, we moved from Singapore to India, the debt also. Mostly working capital debt was a timing issue. And that should, over a point in time, come down as we have the inventory, because we also have higher inventory in end of December ending. As you get liquidate that, that debt will come down. So more of a timing issue, working capital. Long-term debt is, if you see last year, I get repaying in both Kenya and US. So long-term debt is lower than what we had earlier, but now short-term debt will come up.
Yeah. Also, I just wanted to highlight this point that if you disaggregate the debt, there is debt which is sitting in UK. And UK, as you know, we have already sort of seized the soda ash unit. So UK is now going to run only 2 profitable lines of bicarb and salt. We do expect the UK to pay down its debt on its own on the basis of the cash earnings it's going to have. India, as I mentioned, will calibrate the earnings in such a way that we are able to also manage parallelly certain deleveraging of the debt we have moved from Singapore to India, because we believe that's the right approach to do. And US, again, I think we will keep an eye on the debt very clearly. What you need to take out where the capex is more or less done, no major capexes are going to come immediately except for the 60 million pounds which we have said we will fund. But that is going to be very value adding because it's only in the bicarbonate and salt business. So UK more or less should be able to manage its debt. We'll come back to this peak debt in the next quarter.
Sure. The final question is just as a carry forward of this, we've created inventories. We see production much higher than sales. Given that the market remains tepid, just curious, why are we setting up additional inventories when we are not expecting much growth in the overall volume?
Yeah. So firstly, I think as far as US is concerned, the inventory is mainly because it has moved into the next quarter. They missed 2 shipments. The sailing, the boats just about moved into the next month. So it is really a timing issue. The inventory build-up in India, we are very sure that we'll be able to calibrate that to manage it at a reasonable level. Certainly, we had to test our plant. For example, the soda ash plant, the commissioned capacity was 1 million ton. So we actually ran and proved the plant can deliver 1 million ton. And this quarter, it produced, I think, 251,000 ton, thus proving the capability of the plant. But we are under no longer any pressure, so we'll calibrate the output and the sales in alignment as far as India is concerned.
Sure. Thanks for this and wishing you all the best.
Thank you. The next question comes from Ankur Periwal from Axis Capital. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. A few shorter ones. First, on the India operations, now year on year, while we have seen an improvement in EBITDA, which is largely led by the volumetric growth, we are expecting this higher volumes to sustain as well as the pricing-led pressure, which probably, the full impact of the price decline is already there in this Q3, or Q4 can see further price decline?
I don't see an issue on price decline, but certainly the volumes will be more, sales volume will be more than Q3 and Q4. And sequentially, I think in India, we will be able to place more material in the market because we have the capability to place them. And also, the material which will come out of Kenya is likely to be a purer material, in the sense that its purity levels will match applications which we have not yet sold. So that 50,000 tons also should find markets both in India and Southeast Asia out of Kenya. And Indian market will be fully serviced through our production from Mithapur, which is now on stream.
Sure. And pricing, you said, should be largely stable, Q on Q.
It has not moved much in the sense that at least this seems to be moving horizontally around that, plus or minus minor movements, but we haven't seen either a move up or a move down.
Sure. A second bit on, the Chinese capacity, Inner Mongolia. Last quarter, we had highlighted there were quality issues and hence some issues in terms of the production ramp up. Given that they are still continuing to be net exporters for the last quarter as well, how is the situation there in terms of ramp up? Is fully ramped up now, or there is still scope to increase it further?
No, I think it's ramped up to the extent they can, and we are not fully clear about the overcoming of the quality issues. It will be going to applications which can accept that quality. But the real issue is that the synthetic ash plants are selling below cash cost at the current price, $180, which is the current price. I think they need to sort of increase it to at least $30 more, in our view. So we need to sort of watch out for how long this sustains.
Thank you. The next question comes from S. Ramesh from Nirmal Bang Equities. Please go ahead. Mr. S. Ramesh, your line is unmuted. Please proceed with your question.
Yeah, thank you very much. So in the Indian Mithapur soda ash expansion, can you share the capacity utilization for soda ash and bicarbonate expansion capacities in 3Q, and what is the utilization we'll expect in 4Q?
Yeah, I think our capacity currently is about 250 per quarter. And if you look at this, the gross production, and split it into bicarbonate and soda ash and dense and light ash, we should be running close to 235 to 240,000 tons. So pretty much that should give you the range of utilization. About 90-95%, yeah.
And what was it in 3Q?
We had actually produced fully. We had produced to the extra 251. That was the capacity it ran. It actually ran at full load, which is why the inventories went up to almost 20-30,000 tons.
Okay, so that figure includes the bicarb production?
Yes, we only declare the gross production, right? Correct. Production figure is gross, the sales figure is net.
Okay. So in terms of the run rate on depreciation and finance costs, how do you think that will move compared to 3Q? Will it be similar, or will there be any increase in 4Q and then for FY26 once the entire capitalization is done?
It will be similar for the Q4 as of now because the debt is expected to be remaining same. So we're not expecting an increase in Q4 compared to Q3.
And the same for depreciation?
Also, because again, capitalize the whole thing in end of Q2 or Q3, so this will not change too much for Q4.
Okay. So in terms of the 15% decline in prices you mentioned in India, has your list price been reduced? Because we haven't seen that in your website. So, or is it more in terms of discounts? How has it worked out? What is the current realization for soda ash from your plant?
We said 15% is on import offerings. It is not really. Now then, they are 15%. Now dollar itself is depreciated. So that should provide some cover. So if you back calculate that in rupees with all the duties put together, that would have already taken care of about 7 or 8% of that 15% as far as the imports are concerned in rupee terms. Our rupee number, as I said, is more or less stable and hasn't moved much. This fall is on the import prices.
Okay. So in terms of the latest that we hear from Canada kind of blocking imports of alcohol from US, do you think that will have any impact on the US container glass demand for alcoholic beverages? Because last time when there was a disruption in beer production, there was a similar disruption in container glass demand. So how do you see that impacting your container glass demand in US?
So our domestic sales into container glass actually is fairly low. Our sales are mostly into chemical applications where we and to flat glass. So we don't see that as a big issue for us. We'll see the exact impact, but we are less impacted because our exposure is low.
Thank you. The next question comes from Rohit Nagraj from B&K Securities. Please go ahead.
Thanks for the opportunity. So first question is on the UK soda ash plant, which is likely to be ceasing to exist. So it has got a capacity of 400,000 tons. Effectively, from this quarter onwards, that entire capacity will not be available, and which also means that the 1 million tons we are targeting to add, about 400,000 tons just to replenish the soda ash capacity of UK, which is going out. Thank you.
Yeah, I think that's one of the issues we are looking in US because the unit which feeds into the UK market is actually US. They will get about, and there's a dense and light ash split. So we do see that they are now contracted out about 150,000 tons annually into the UK market itself from existing customers. So this is continuing to serve the existing customers which we have in UK. So obviously they have a market space available to at least take care of, if not, I would say 400,000 tons which we planned in US, at least half the number. Which is why I said initially that we're trying to calibrate the market expansion in such a way that we also de-risk ourselves from any variations in the market price.
Fair enough. And second question on the specialty products front. So we've seen that this segment has barely able to make any money at the EBIT level. So any specific reasons for the same?
This quarter is actually a weaker quarter for alloys, which is why the amount is usually lower. And if you come to standalone, I think as far as we are concerned, that this quarter, in fact, for the last 2 months, the market, the orders which we are fulfilling are closer to about 80-85% of the production capacity. So we will come back with specific numbers for both Nutra and Silica in the fourth quarter, where we should be producing to the fullest output of these two plants.
Thank you. Next question comes from Nitesh Dhoot from Dolat Capital. Please go ahead.
Hi, sir. Thanks for the opportunity. So my question is on the amendments to the emission trading scheme, ETS, in EU, will likely lead to lower Turkish soda ash imports and benefit the local manufacturers. So Turkey players had also mentioned about an impact on the contract negotiations for 2025. So how should one read this in the context of Tata Chem shutting down plant? And as a follow-up, is this, an incremental question there, is it likely to, put further pressure on the Indian industry as Turkey imports will likely, increase significantly into India?
Yeah, so I think as far as Europe is concerned, I think their emission trading scheme and its impact on to protect the domestic industry, the CBAM which they've done. Natural soda ash still would be a lower carbon footprint than synthetic soda ash in many ways, and it is for Turkey, the natural market will continue to be Europe. That doesn't change the basics of the discussion in terms of what makes sense, and That's where I would stop it. And the logistic cost to India and Asia, I think they have to come through Suez, they have to come through Red Sea, so there are other issues in this market. What they will naturally try to push the product is to Western Europe, and whatever is the let's say some overflow, if it does happen, it will find onto the eastern seaboard of South America.
Nitesh, does that answer your questions? The next question comes from Saket Kapoor from Kapoor Company. Please go ahead.
Yeah. Namaskar, sir. Thank you for the opportunity. Sir, firstly, with the introduction of the minimum import price, the threshold level of 20,000 odd level per ton, how does this suffice a lot of this import issue which you have alluded to in terms of the same flowing from China and other geographies into the country, and thereby supporting our margins and also improve levels of utilization levels for the Indian operations?
I think it provides the floor, and secondly, as we said, it is also sentimental in some ways because the MIP as we speak today is actually lower than the current prices at which we are contracting, and we are not seeing our sales price ever touching that number. What is more important is that the anti-dumping investigations have started, and I think that process will move in parallel. So while this is being imposed as a quick measure to ensure it doesn't go below a threshold price, the real numbers would come out when the ADD investigations are over, which is already underway.
Okay, so you are mentioning that the realizations are currently higher than the MIP mentioned.
Psychological barrier, but I think in reality the imposing of anti-dumping duties is a permanent measure which will protect improve the situation, which is whose process is underway as we speak.
Okay, and so when can we hear more about it in the exam?
I have no definite time frame, but this is up to authorities to investigate. It usually takes anywhere between 4 to 6 months of investigations.
Thank you. The next question comes from Mithil Bhuva from unilistedindia.com. Please go ahead.
Yeah, sir. On the US front, EBITDA margins, can we say that the new normal is like 15%? It used to be 20% before. Even after the coal prices have come down, actually. So the new EBITDA margins in soda ash business is around 15%?
Yeah, this being a futuristic number, we can't comment on that as of now in this call.
Okay. But has it come down actually? What is the expectation of the management? It used to be 20% before, but now after the new capacities have come, is it going to be 15% only?
This quarter also is a question of mix. So each quarter, the whole mix may change depending upon the customer mix. So one can't really comment on quarter that margin is going to remain. So therefore, I'm saying going forward, what margin is going to keep. Really can't comment on this one quarter numbers. It could be different. Again, mix changes, it may have a higher EBITDA or lower EBITDA, but I can't comment on future numbers based upon this one quarter numbers.
Okay. So, and how does Tata Chemicals plan to decommoditize? Like the management and sales had said that they will commoditize Tata Chemicals. How do you plan to do it?
Yes,
any comments on that?
No, I said we'll also move businesses into more non-cyclical. So in fact, we've added disproportionate capacity in bicarb and salt, which we will continue to do, and also grow the soda ash to the extent we can enter segments through brownfield expansions.
Okay. Any other area of chemicals that we are planning to
progressing our both nutraceuticals and silica business. Those are the two we are focused on.
Oh, thank you.
Thank you. The next question comes from Arjun Khanna from Kotak Mahindra Asset Management. Please go ahead.
Thank you, sir, for the follow-up. Just on the Lostock side, so we did write off all the plant and equipment. Now we have taken a provision for employee costs. Do we see further expenses, maybe for cleanup of the site, etc., in the future?
Actually, that is right. So what I would say, Arjun, is that when we took an impairment on the asset.
Right.
An impairment is a testing which you have to do whether you run the unit or seize the operation. The seizing the operation decision has happened only now, and this is the cost to seize operations. Our best estimate as we speak today, we expect it is likely to remain in this range. If it's slightly lower, it will release some money for P&L. If it's slightly more, it will go into the P&L. But this is our best estimate in terms of employee benefits for termination of their services. This is what it is going to take us to close the site in a safe manner.
So it includes both the costs, Arjun, in terms of the employee as well as the closure cost in the 70 crores.
Sure. So we do not envisage a major incremental expense post this at this point in time.
Not a major. If at all, there will be some minor movements depending on actual expenses incurred. This is our best estimate.
Sure. So the second on the specialty, you did delve on it, but if I look at the standalone, we see that margins are close to nil, even though we are operating at 85%. So either the pricing is extremely low or we are very inefficient at current scale. Could you help us understand what's happening here, given that on a sequential basis, margins have actually come off, even on a year-on-year basis as utilizations are increasing?
Yeah, so I think you're right in the sense that if we don't increase the scale, at least double the capacity over a period of time, because the utilities there have been set up for almost double the capacity. It is going to move along. We didn't want to add additional capacity till we proved that the current capacity could be fully used, because otherwise we'll have a much higher idle capacity. I think now that we are inching towards, we will move forward with what we call as a balance equipment, which will be added to this unit to increase output for the market.
So has a decision been taken, and what are the timelines?
It is moving forward, and we will come with specific number by the next quarter on exactly what is going to be the phasing. It may still be in two steps, because we can add entire 5,000 in one step, or we can add it in two steps of 2,000 and 3,000, and we are working. That's the plan today. The plan is just to add do it in two steps rather than in one step immediately.
Sure. Thank you, and again wishing you all the best.
Thank you. Ladies and gentlemen, we will take that as our last question for today. I now hand the conference over to the management for closing comments.
Yes. Thank you, and thank you for joining the call today. And as we spoke, from the last call to this call, I think the markets have remained range bound at a lower pricing scenario, largely driven off the supply-demand imbalance which is existing today. We do expect that over a period of time, the current pricing which are unsustainable, some changes will certainly happen. We can't comment on the timing. So we have already highlighted that this level is likely to continue for 3 to 6 months at least. In terms of the growth in market, we do believe that India is well positioned to continue to grow. Asia is well positioned to grow. The US and Western European markets are flat, or Western Europe is slightly degrowing. However, we do expect that US would move forward because it continues to grow as an economy at a good rate going forward. In terms of our approach, we have been very clear about our ensuring that we are able to run sustainable units. With that decision, we have taken cessation of our UK plant. And as I mentioned, that while our growth ambition has not changed, we are only calibrating the growth ambition in line to make sure our cash flows match with the capital needed for investment, and at the same time we are able to deleverage in a meaningful way every quarter, every year going forward. Thank you all, and see you next time.
Thank you. On behalf of Tata Chemicals Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.